All right. The last time we talked, I told you it was time for caution. And one of the main reasons I was saying it's time to be cautious was the weekly chart on the Dow Jones. And you could see so far this week that has not changed because we are getting another weekly bearish candle. And the Dow Jones is very likely leading the way lower. While even though we still do have a strong tech sector, it does look possible that the NASDAQ 100 could be ready to start pulling back as well. So the Dow Jones, without a doubt, is leading the way lower. And this is a weekly chart. So if we cannot close the week above this rising 20 period moving average, that is going to be extremely bearish looking. And then the other thing I warned you about was that the VIX was very low here, and I told you there was a good chance we're going to see the VIX starting to spike higher towards 15. And this is telling us there is going to be a lot more fear and volatility as the VIX is rising. So a lot of those caution signals and those warning signals that I was telling you about last week are starting to play out this week. So just keep these signals in mind as we continue through the remainder of this week. All right, so jumping over to the SPY daily chart, you can see here that I had the expectation we would pull back towards the retest of the breakout and a gap close around 523. And this is still what I think is likely happening. I think we're going to pull back a little bit more, and then the bulls are going to have to show up at that support if we want to see more all-time highs. So in the very short term, watch 523 very closely, and I will remind you that I do suggest staying bullish while SPY is above 523, which means as we approach 523, that is going to be a buy the dip opportunity. If you are too nervous about it, obviously do not buy the dip, but that is a very solid risk level. And then just remember to get risk off if we break down below it. So below 523, I'll be looking for 512. And while we're above 523, I still think there's a possibility this is a higher low pullback. And after this higher low pullback, we will likely continue to climb a bit higher into the beginning of June. And that price target I'm giving SPY will be right around 534. So above 523, you can still buy the dip as we're pulling back. If we break down below 523, get risk off because we're likely going a lot lower. On the NASDAQ 100 triple Qs, we were down 0.7% today. And similar to SPY, we are starting to see a pullback, but by far this is the strongest index because it does have the heaviest weight of Nvidia stock, which has been on a face-ripping rally for 2 years now, and it's still continuing to go higher after reported earnings. But I will warn you that momentum in Nvidia is likely going to start stalling out, so it is possible the NASDAQ 100 starts to pull back as well. So use the risk level right here at 453, and if we break down below 453, we are very likely going to 446. So 446 will be the support I'm looking for if we cannot hold above 453. As we pull back into 453, there is going to be an opportunity to buy the dip because if we bounce from 453, it is still possible to make one more all-time high right around 461. Now you may be asking yourself why I'm saying one more all-time high, and the reason I'm saying that is because I do think we're about to get into a period of lots of volatility here coming up in the summer. So I do not want you to be overly bullish or overly confident the market is going a lot higher. And I'm not trying to call a top here. I'm simply saying we are traders and our job is to manage risk, and the risk to the downside is starting to become a lot more than the potential reward to the upside. So just keep all of that in mind and make sure no matter what you are doing, you are managing risk, which means if we start to break below support, you cannot just blindly continue to hold long positions. If we're going to see a deep pullback or a correction, you will want to manage risk, which means trim your positions and even consider shorting the market as long as you understand how to. So 453 is my line in the sand for the triple Qs, and below that I'm looking for 446. On the Dow Jones, we were down 1.03% today, and over the weekend I did this projection that I thought even if the Dow bounced, it would just be a lower high bounce, and then we would likely come down here towards 382 to 383. And I do believe we are going to hit that price target right on schedule, where you could see the arrow is getting there by tomorrow. And then once we get there, I will warn you against being too bearish because we are getting close to the lower Bollinger Band, and we will be in a potential demand zone of support in the 380s. So as we approach this price target, just keep in mind we also have a gap up here at 387, and it's still possible we bounce all the way back higher towards 391. So as we're going lower in the Dow, I would cover any short positions if you are shorting the Dow, because there's just not going to be a lot more potential downside in the short term once we hit this lower price target. So even look for a bounce coming up here shortly, and if you want to long the Dow, you're going to be using this risk level right around 382, because below that we're likely coming down here towards 377. On the Russell 2000 IWM ETF, we were down 1.48% today, and we did break down below a critical support zone at 203, and below 203, it does look possible that we could close a gap at 200. Now, I'll tell you, just similar to the Dow Jones, as we approach this support zone, there's not going to be a lot more downside, and I actually think that could be a time to get some low risk long entries. So do consider that as we approach 199 to 200, and the short-term target will be a bounce towards this gap fill right around 204. So even though we are risk off below 203, you could try to catch a falling knife around 199 or 200 as long as you're comfortable doing so, and just get risk off if we can't hold above 199. On the ARKK ETF, we were down 1.25% today, and we are continuing to look bearish below 45. So below 45, there's no reason to be a bull here, and the next support we're coming into will be down here right around 42.4. If we can get back above 45, 46, and 47, then we can talk about being bullish, but this is still looking very bearish. On the VIX, we were up 10.53% today, and the VIX is spiking towards 15, which was a projection that I gave. And this is simply because I was saying there's some warning signs last week with the weekly candle on the Dow. And you never want to ignore price action because price action does all of the talking around here. So this was simply just a prediction that we would see more volatility as people started to panic sell, and we're starting to see that play out. However, I don't expect some crazy amount of panic here unless we start to lose some critical support in the major indices, which means we're going to need to see SPY below 523 and the triple Qs below 453. So as long as the VIX is below 15, you can still buy the dip, assuming the indices can hold critical support. On Bitcoin, we're currently trading just above 67,000, and you can clearly see here Bitcoin did not hold 68,000, but I did tell you you can also stay bull while we're above 65,000. So I will reiterate that you could stay bullish in Bitcoin right here, but you will need to get risk off in Bitcoin if it cannot hold above 65,000. And as long as Bitcoin is above 65,000, I do still believe there's a good chance it's going to 75,000, but you can throw that out of the window if it breaks down below 65,000 because it's likely going lower. On Nvidia stock, we were up 0.81% today, and Nvidia is hitting some price targets up here at 1141 and 1155. We're way outside the upper Bollinger Band on the daily chart, and we do have a monster gap down here right around 1064. So it is getting very difficult to assume that Nvidia is just going to continue to climb higher, but if it does break above 1155, it is possible to get into the 1170s and a price target just below 1200. But I will have to now start being one of those people that thinks there's a very good chance this stock is finally reaching some kind of major top, which means it will likely be due for a major correction or a long-term period of consolidation as it consolidates some of these newfound gains. This is just getting to the point now where we've hit a lot of these price targets where a lot of people even doubted it would get to $1,000, and now it's sitting even higher than that. So just be very aware of that. I'm not saying you need to go sell all of your long-term positions on the stock, but just be aware it could be coming down in a big way. And I do think it could easily come back down towards this zone between 1032 and 1056. So from today's close, that is still about a 7 to 10% correction, which is something significant if you're just now continuing to buy up here. So be aware of that. We do have higher price targets. I'm not saying it can't go higher while it's in a bull trend. I'm just telling you to simply be cautious and look for possibilities that it could be reaching a peak here soon. On Tesla stock, we were down 0.32% today, and Tesla is still holding above 173. But right now on Tesla, I really want to see it getting back above 180, and above 180, I will get very bullish on it. And I do think above 180, it's likely going to run higher towards 197 and 207. However, because we are so close to 180, this is just a time to simply just wait until we can get the price action proof it's bullish. We'll see the breakout, and then we can jump right in. So it's up to you how you want to trade it. I suggest waiting until it's above 180, but if you want to stay long here, you're still managing your risk at 173 and 167, and if we break below those, it's without a doubt risk off and it's going lower. On Apple stock, we were up 0.16% today, and Apple is trying very hard with all of its energy to try to get to that price target at 195, but I will tell you, don't get caught up here. It doesn't need to get there. It's starting to look like it could be getting a double top rejection, and you can see there is a lot of selling pressure here above 192. So I don't really think the risk reward is really there right now. If we're getting a lot of selling pressure at 192, do we really want to hold it to get that extra 1.5%? My opinion is it's just not worth it, but you can obviously still stay bullish while it's above 186. But if it does break down below 186, it's looking risk off and it's likely going a lot lower. And then very quickly, we'll look at the financial sector, and you can see this is not looking very strong either. It did break down below 41, which was a retest of a breakout. So if the bulls were buying there, that would have looked bullish, but we can clearly see something is going on in financials, and we did get a bearish breakdown. So just manage your risk around 41, and while it's below 41, it does look risk off. And if the financials are selling off, that is definitely a warning sign you should not be ignoring. So jumping back over to the S&P 500, there's a lot of caution signals out there, which I talked about over the weekend. And those caution signals are starting to play out, which means you should be cautious here and you should be managing risk. It's still a bull trend and it's still a bull market, but while we're starting to get these pullbacks, you really need to start considering how you're going to manage risk if we get a bearish scenario and we start to break down. Remember that I always tell you be aware of the bullish scenario and the bearish scenario, and then let the price action do all the talking, and always manage your risk around critical levels. At the end of the day, if you continue to lose trades but you are managing risk and you are being a good risk manager, you will be able to remain in the game and you will be able to continue to show up and continue to trade. But if you are gambling and you are ignoring clear risk off signals, or you are shorting very powerful bull trends, you will not be trading for very long because you're just not being a good risk manager. So learn how to manage that risk around these critical levels, which I give you each and every day, and then go do the work and build out those trade plans so that you're prepared for anything. We are absolutely crushing this market on the Stocks Channel Discord server. So if you want to come crush the market with us and get access to all of my intraday updates, technical analysis, and my trade ideas, you can find out how to join the Stocks Channel Discord by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.